Bismillahirrahmanirrahim. Assalamualaikum. My name is Danish Abduluddin bin Abdul Alim. I'm from Group 1, KMB3. Our presentation today is about performance and challenges in global Islamic capital market.
Assalamualaikum warahmatullahi wabarakatuh. Introduction for the global Islamic capital market. The global Islamic capital market has grown and developed significantly in recent years, receiving recognition from nations and financial institutions around the world for its potential and worth in the financial sector. The Islamic capital market encompasses a wide range of financial instruments, including Islamic banking, sukuk, Islamic mutual fund, and Islamic equity fund. So, the first issue is the pandemic COVID-19. COVID-19 worldwide epidemic has not only affected the social life of billions, but it has also created serious contagion in a global financial market, forcing investors to seek a safe haven assets. In this context, we investigate the safe haven features of the Islamic stock investment in comparison to the conventional equivalent in G7 nations. And lastly, Islamic and conventional equity investment have lower return interdependence. Conventional equity investors in developed financial market could improve the resilience of their equity portfolios in both normal and bearish market conditions by diversifying into Islamic stock. Second, Islamic investment pro-social characteristic such as its absence from the drug and weapon trade and make it possible complement to social responsible investment. As a result, in the post-COVID period, Islamic investment might potentially aid in the transition to socially responsible investing. And then lastly, financial market authorities may strengthen the financial system risk management by pushing conventional businesses.
Okay, for the second challenges is conventional market integration. The conventional capital market integration refers to the process of linking the financial markets to the different countries or regions, allowing investors to trade securities across borders. This integration provides opportunities for international diversification, where investors can allocate their investments in various markets to reduce risk and potentially enhance return. The impact of Islamic capital market integration on asymmetric information among the five Asian countries is an interesting topic of studies. Asymmetric information refers to a situation where one party involved in a transaction possesses more information than the other parties. This information asymmetry can lead to market inefficiency and distortion. Okay, next we move to the factors. The impact of Islamic capital market integration on asymmetric information among the ASEAN countries. Several factors should be considered. First, information disclosure. Islamic capital markets typically require companies to disclose more information compared to conventional markets. Second one, Sharia compliance. The integration of Islamic capital markets may result in a more standardized and harmonious regulatory framework across ASEAN countries. For the third factors, market development. The integration of Islamic capital markets may promote the development of new financial products and services tailored to Islamic principles. And the last factor is investor education. As Islamic finance principles may be different from conventional finance, the integration of Islamic capital markets may require increased investor education and awareness.
Okay, I will continue with the next challenges, which is the boundary of Islamic law. Islamic capital market products are being considered generally mimic and futures of the conventional financial product, while trying to stay within the boundary of Islamic law. First, complicated products that are difficult to understand and costly to be initiated and implemented This resulted in complicated products that are difficult to understand and costly to be initiated and implemented, and combine many different contract structures that individually meet the criteria of Sharia, but there are responsibilities conflict with the objective of the Sharia when uh, arranged into one entity. Next, the complexity of Islamic concept can make them difficult for the market participant to understand. The complexity of this product can make them difficult for investors and market participants to understand. It can also increase the cost associated with the initiating and implementing this product. This complexity arises from the need to address the requirement of Sharia law while also meeting the expectation of the market. Next, the problem of strange risk structures and allocation between the different parties. In addition to the problem of strange risk structures and allocation between different parties, there are also problems with the pricing and the level of the profit of Islamic capital market product. After that, the absence of standardized practices and product structures can contribute to pricing challenges. The absence of standardized practices and product structures in Islamic finance industry can contribute to the pricing challenge. It can be difficult to determine the fair value of the certain Islamic financial instrument, leading to the uncertainty in pricing and potential discrepancies in profit level. Lastly, the limited liquidity of the market that can result in higher transaction costs and make it more challenges in the price and trade Islamic capital market product effectively.
Next is a performance of Islamic capital market. Analysis of Sharia capital market growth. The performance of the Islamic capital market can be evaluated using the Sharper Index, Trainer Index, and Jensen Index based on the information provided. What is Sharper Index? The Sharper Index is computed by dividing the risk premium, the excess return over the risk-free rate, by the standard deviation of the portfolio. Second, Trainer Index. The Trainer Index measures the performance of a portfolio based on its systematic risk as defined by beta. Last one is Jensen Index or Jensen's Alpha. The Jensen Index compresses a portfolio's actual return to its project return using the capital asset pricing model, CAPM. Next, performance of leading Islamic finance during COVID-19. Based on the study's findings, the performance of leading Islamic finance markets during the COVID-19 pandemic can be summarized as follows. First, increased volatility. The pandemic outbreak result in higher volatility across the sample Islamic finance market. Next, volatility fading. This indicates that Islamic equities possess hedging features, which means they were able to recover and stabilize faster compared to conventional equities. Next, hedging and diversification benefits. Islamic equities were found to offer portfolio diversification benefits to investors. Last one, lower correlation. This implies that these markets were less synchronized in their movement, providing opportunities for diversification across different Islamic finance markets.
So, in conclusion, the Islamic capital market has become a thriving and dynamic part of the global financial system. Its adherence to Sharia principles and ethical investment practices that attract diverse investors and its resilience during financial crisis is noteworthy. With the ongoing growth and adoption of Islamic finance, this sector is expected to have a significant impact on the global economy, promoting financial inclusion, sustainability development, and responsibility investment. That's all from our group. Thank you. Assalamualaikum warahmatullahi wabarakatuh.